Ladies and gentlemen, good day and welcome to the ZF Commercial Vehicle Control Systems India Limited Q2 FY2024 post-result conference call hosted by B&K Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Annamalai Jayaraj from B&K Securities India Private Limited. Thank you and over to you, sir.
Thanks, Akshya. Good afternoon. Thank you for joining us today and welcome to ZF Commercial Vehicle Control Systems India Limited quarterly earnings call. The second quarter earnings and half-yearly results for this year 2023-24 will shortly be presented by the management team of ZF Commercial Vehicle Control Systems India Limited, formerly known as WABCO India Limited. Your host today from ZF Commercial Vehicle Control Systems Limited are Mr. P. Kanniappan, Managing Director, Mr. R. S. Rajagopal, CFO, and also Mr. Muslim Lakshmi, Company Secretary. I will now hand over the call to Mr. P. Kanniappan, who will provide you with further insights on the results. Over to you, sir.
Thank you, Mr. Jayaraj. Good afternoon to all of you. I warmly welcome you all to ZF Commercial Vehicle Control System India Limited second quarter results and half-yearly performance for financial year 2023-24. We'll make certain forward-looking statements today based on management's good faith expectations and beliefs concerning future developments. As you know, actual results may differ materially from these expectations because of many factors. ZF Commercial Vehicle Control Systems India Limited results for the quarter ended June 30, 2023 were published on October 27, 2023. They are available on the www.zf.com website within the ZF CV India Investor Relations section. We hope that you have had an opportunity to go through them. The recorded audio and transcript of this call will also be made available on the website at www.zf.com under the ZF CV India Investor Relations section. I'm happy to talk to you today as we give you an update about the company's business. First, the industry and economic update. I want to start with a quick update on our operating environment, which is influenced by economic factors and the development of the commercial vehicle industry. India's GDP growth estimate is projected at 6.3% for FY2023-24. And consumer price index CPI-based inflation softened to 6.8% in August after surging to 7.4% in July. IIP index of industrial production growth of July 23 at 5.7% versus 3.8% in June 2023, led by infrastructure and construction goods. Industrial activity continues to be supported by robust capital expenditure by the central and state governments. Future industrial performance trends will be influenced by the following factors. Global economic slowdown is expected to intensify from the second half of 2023, which will keep exports weak and spill over to manufacturing sectors based on export demand. Monsoon's performance will critically influence industrial prospects through impact on inflation and rural demand. Monsoon remained deficient at 7% below the long period average until September 2023. Strong all-around performance, significant year-on-year growth in all segments was reflected in the commercial vehicle production, that is vehicles above 6 tons, in Q2 of financial year 2023-24, which was at 1,02,514, with a growth of plus 21.2% versus the same quarter the previous year. This growth of 21.2% is supported by increased government spending, robust replacement demand, and strong end-user sectors, notably construction and mining. Further, the growth is expected to continue in the coming months with the government capital expenditure and demand from key sectors and declining raw material costs which positively impact profitability. Let me give you a performance update within the segments of the company. OE sales. The medium and heavy commercial vehicles segment is on its road to recovery. As we are given to understand from various customer interactions, the utilization of trucks has been steadily increasing. Currently, the utilization of trucks is of the order of 70%, which is an indicator of the replacement cycle kicking in. The freight operators can pass on the fuel price increase, and on the back of the various new technologies that the current trucks are equipped with, the cumulative fuel efficiency has also improved. All these factors, along with the healthy growth in the trailer production, have helped the company to record an OE sale for Q2 2023 of 449.4 crores with a quarter-on-quarter growth of 28.8%. OE sales in Q2 of FY2023-24 was led by penetration of pneumatic and hydraulic ESC, electronic stability control, and applicable bus platforms, and notified by the regulation with effect from April 2023. Increase of electric vehicle bus production by about 11% until Q2 compared to last year, and the sale of EV aggregates like e-compressor and electronic braking systems. Increase in trailer production and penetration of trailer electronic braking systems. Now coming to aftermarket, the aftermarket segment of the company has registered a sale of INR 118.4 crores, which is a growth of 14.8% in Q2 2023-24 versus Q2 22-23. Growth in the aftermarket was driven by various factors as follows. Growth in STU segment through focused engagement initiatives on solution kit penetration, for example, air compressor kits, air processing kits, etc., along with the increased consumption of automatic slack adjuster and fitness certificate kit spares, FC kit spares. An exclusive distributor for STU to fulfill the sales and service requirements has been appointed. Fulfillment of export requirements, that is from Sri Lanka and Bangladesh, which was actually in a subdued state, but earlier, now it is also improving. So that contributed almost 63% growth in Q2 23, and year to date of 24% over last year, though the base is low. Trailer segment has grown at 41% year to date and 73% in the last quarter as a result of the continuous engagement with the key large fleets. Also, about 60 campaigns are conducted across the nation to improve secondary sales of focused products. 185 training programs conducted to various stakeholders like STUs, wholesale distributors, and fleet owners, and 2,000 plus people are trained in our product portfolio. Increase the reach to improve the service of BS6 and EV spares through the appointment of 6 new authorized service centers. The overall aftermarket sales are facing headwinds coming from the reduction in the mining segment due to seasonality, weak secondary payment collection, and the distributor stock claiming to greater than 45 days levels. Exports. Export sales were at 323.4 crores with a growth of 23.1%, and export services were at 92.3 crores with a growth of 25.3%. The increase in export sales was driven by new launch of G6X model for BMW and ramp up of volumes for existing G7X and G2X platform for X series and 5 series. This is related to the air supply unit that we supply to BMW company. one-time orders to global aftermarket for certain XR kits and air supply units. Job compressors volume ramp up for the 564cc compressor and the 440cc compressors. Volume transfer from the Americas to India. Lever. The volume of lever that we supply from Mahindra City to China increased in 2023 as we supplied now to 3 plants in China versus last year wherein we supplied to just 1 plant. Foot brake valve. Foot brake valve volume increased in export by about 40% due to truck model change in Daimler Trucks North America. Actuators volume increased for trailers in the EU market. One-time orders from Turkish trailer customers as well. And updated in our earlier conversation, the technology center is thriving in its new home at DLF. The capacity is rapidly filling up as the value proposition offered by the engineering center in India is appreciated by the engineering community. We are adding skilled engineers to provide engineering services to ZF, and 238 engineers were added in the last year to the existing resource pool, especially in the areas of embedded system and software system. Change in management. As already informed to the stock exchanges, we would like to touch upon the change in management as follows. Mr. R.S. Rajagopal Sastry, consequent to his decision to resign to pursue other opportunities, will be in the service of the company till 16th January 2024, and Ms. Shweta Agarwal will be joining in as Chief Financial Officer of the company effective 10th January 2024. Dr. Lakshmi Venu had resigned from the board of the company due to her reoccupation, and it is effective 31st October 2023. The board, at its meeting held on 27th October 2023, had appointed Ms. Amrita Chaudhary as an independent director effective from 27th October 2023. Awards and recognition. ZF Commercial Vehicle Control Systems India Limited was honored with the Partnership and Collaboration Award, a special award given by the Volvo Eicher Commercial Vehicles in their annual supplier conference 2023 amongst 500 esteemed supplier partners and technology collaborators. The company is the proud winner of the prestigious Sustainability Excellence Award at the recent Tata Motors Supplier Meet 2023, selected from a pool of more than 800 commercial vehicle suppliers and technology partners. My TVS Group awarded the TVS India Aftermarket team for their partnership spanning many decades with return. Also, our Ambattur plant employees from different functions won the following awards. Platinum awards in each of CII National Six Sigma competitions under 2 different categories. Gold awards in each of QCFI, Quality Control Forum of India, Tamil Nadu state level QCC competition under 2 different categories. The EHS team, Environment Health Safety team, won the PC Sandana Medal for the best paper presentation of the 70th Annual State Conference of the Indian Association of Occupational Health, Tamil Nadu branch. Also, Mahindra City plant employees from different functions won the Gold Award in the QCFI, Tamil Nadu state level QCC competition, and both Ambattur and Mahindra City plant employees together won a Gold Award in the QCFI CE competition, Safety, Health and Environment competition. Now moving on to our financial performance for the quarter. For your ready reference, the results were made public at 12:42 p.m. on the 27th of October 2023. I hope you have had a chance to go through them. The overall revenue of the company from the sale of products was INR 890.9 crores, and the total revenue from operations was INR 992 crores. Profit before tax at INR 141.2 crores is 15.9% of the revenue from the sale of products. This is a 56.4% improvement compared to the same quarter of the previous year. Our EBITDA is at 19%, again a 2.3% expansion on sales compared to the same quarter of the previous year. Our profit after tax is at rupees 105.7 crores, which is an improvement of 54% compared to the same quarter last year. Our focus now is on profitability as we have such products in our portfolio that are low in margin. Concerted efforts to reduce costs, reset prices, or even phased exits of phased exits are planned to ensure long-term profitability. Such steps now are considered essential to keep the company in a healthy state to make the best use of upcoming disruptions in technology, the market, and the economy. We now welcome your questions and feedback. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mr. Mumuksh Mandlesha from Anand Rathi Financial Service Limited. Please go ahead, sir.
Yeah, thank you for the opportunity, sir, and happy festive season to management. Sir, can you talk about how has been the ESC implemented now by the industry? As earlier, there was a confusion among the bus bodybuilders, and only 60% was implemented. What is the status of that implementation, sir? And the second question is, can you talk about any new regulation which government is considering or under draft stage where our products could benefit in the coming years?
Yeah, thank you. On the ESC regulations, I would say the implementation still remains to be about 50% compliant. Main issue is some of the customers, because the bodybuilding is taking place elsewhere, they don't fit it in the plant and leave the responsibility to probably the bodybuilders, but bodybuilders don't fit it. So there are few loopholes in the system if they are using it. But that is the general situation in India, unless otherwise the company fits it in the factory and then the product is certified. The challenges are there. So we are working with regulating authorities and also RTOs and others to see maybe to focus more on education and compliance on this aspect. So, but the results could be a progressive improvement. I don't see a immediate change to total 100% implementation. This is on the first question. The second question, you were talking about new regulations. The new regulations are in the area of ADAS, Advanced Driver Assistance Systems, or the part of the regulation that is actually likely to come in the market in the next few years is Autonomous Emergency Braking System, which is essentially you minimize or eliminate the road accident. Even if there's a collision mitigation, where you mitigate the collision and also reduce the impact of that as well. So this regulation is already in a draft stage. That's all is visible right now. So, but it's a very important regulation. We expect that to come in the next 3 years.
And sir, ESC for the truck segment, sir?
Yeah, that is it's not yet come, but as I also earlier told, it's a matter of time that what has come in the bus segment will actually extend it to truck segment as well. So far, it is not announced yet because the industry is now going through implementing in the bus segment, and the market also has to see the benefits, etc. So, in the future, calls, more clarity if it comes in this area, I will share.
Right, sir. And just a clarification on the numbers which you shared on the revenue breakup. Sir, can you once again indicate the revenue breakup for OEM, aftermarket, and exports, sir?
Yeah, just a moment.
Should I? Yeah. OEM is at 449.4 crores.
Right, sir.
Aftermarket is 118.
Right, sir.
And exports is 323.4.
And the production number for more than 6 ton is 102,540, right?
That's correct, yeah.
Yeah. Thank you so much for this. Thank you.
Thank you.
Thank you. Before we take the next question, we would like to remind the participants that you may press star and 1 to ask a question. The next question is from the line of Mr. Varun Arora from B&K Securities Private Limited. Please go ahead, sir.
Hi, sir. So, can you discuss any specific plan for product localization and cost reduction in high content and advanced products like electronic braking system and systems? Hello.
My voice was not
okay.
clear.
Yeah.
Please again, please.
Sure. So, can you discuss any specifics for product localization and cost reduction in high content advanced products like electronic braking system and EV systems, sir?
Yeah. First of all, our immediate priority is to focus on those products that comes under the same scheme and other the subsidies for which certain percentage of domestic value addition is the requirement. So our current priority is in the area of electric compressors. Electric compressors soon will be touching 50% localization. And then by next year, I think we are targeting to go up to about 70% next year, middle of next year. So this is a separate project. It is being driven by our team. So that is clear. And the second is in the area of electronic braking systems, etc. As the volume reaches a certain level, we would like to trigger a localization. Now we are exploring because this is some of the parts for electronic EBS. It may be economical to import because of the large volume it is being produced in other parts of the world. But India, we are now looking at the component level, starting in a small way. We will also be initiating the localization. Right now, it's fully imported. Maybe the future meetings will share with you. Because the reason why we have acquired the new site at Oragadam and then also created a new legal entity to get the PLA expertise and making sure only from that perspective to make sure all these advanced products are localized. So today we are only in the mature state as far as electric compressor is concerned. Other things we are starting.
Okay. So, if I may squeeze a small question on ESC. So, I want us to know what is the revenue we are getting through ESC only. If you can share ballpark number, that would be helpful.
Revenue from ESC.
Yeah, I told you it's two aspects in the ESC. The one is on the hydraulic ESC, other one is the pneumatic ESC. And hydraulic ESC, the market today is about 200 vehicles are being produced with hydraulic ESC. It may change. That's the current trend. Pneumatic ESC, it started well, but I don't know the exact number in the recent times. But then there has been I would say the adaptation level is slightly less. I must have actually indicated each value per vehicle. In the case of hydraulic ESC, it's in the range of about 18,000 to 90,000. In the area of pneumatic ESC, so Now it may be about 30,000, but actually also when we have got some localization, when it is fully localized, it will further come down. So it's 60% of the applicable bus segment is this is required to be fitted, but actually the numbers are much lower today.
Okay, sir, I'll fall back in.
Thank you.
Thank you. Participants who wish to ask question may press star and 1. The next question is from the line of Miss Nirali Gopani from Unique PMS. Please go ahead.
Hi. Thank you for the opportunity. Sir, congratulations on very strong and consistent results. Sir, to start with, predominantly we are a commercial vehicle company, but currently we do supply air supply unit to BMW. So going ahead, is there any possibility or opportunity to add newer products for passenger vehicle, or will that be even a focus area for us? Or to put it either way, can we supply this air supply unit to any other players other than BMW?
Yeah, but then it's intercompany sales. So the decision has to come from our global product lines. Wherever they secure new business, and then if they choose India to be the manufacturing site, we have the opportunity to supply to them. But right now, if you see this product globally also, it's only BMW based, that platform. So BMW is one customer, VinFast is another customer, and we are also supplying this one to Geely to China. But major part of the production goes to BMW only. We don't directly identify customers and then go and promote this product, because that responsibility today within ZF is with global key accounts and product lines. As such, I don't see a big change in the numbers of this in this approach in the next 2 to 3 years. But the good thing is this product volume was growing. Only it's the last 1 year. 1 year, this has been one of the fast growing products in our export portfolio. That is largely driven by the growth of that BMW platform, because this is also applicable to EV and the new energy vehicles as well. So from that perspective, in terms of number-wise, there will be a growth there, but only to these customers for us. I'm not in a position to really, at least I don't have any visibility of bringing any more customers than what I've already told you.
Right, sir. Perfect. And so secondly, on this outsourcing opportunity, so if I understand it correctly, currently whatever we are manufacturing and selling is largely from WABCO's basket. So by when should we start seeing newer products from ZF basket that is outsourced to India for us to manufacture?
What specifically for manufacturing?
Yeah.
So right now, the approach we are taking is through positioning ourselves as the best cost location and the most, I would say, competitive production center. And whichever product we are able to do, we get that opportunity. So if you see, there are a few product lines we are exporting. Compressors are becoming more and more competitive. So that is one segment. Air supply unit is another segment. Actuators are another segment. And most recently, we have started supplying certain levers for the disc brakes. So in all these things, we are only continuing to improve our competitive positioning. So business is expected to grow in this segment. In terms of new products, as such, we don't have immediate. There's no discussion immediately on this in this direction. But I can give an example. For example, the electric compressors, if India becomes a globally competitive site, then we can actually propose India as a production center. But then first we need to localize and make sure the product globally competitive. That opportunity exists if we really are, completely we are able to localize. We have that, opportunity and possibility, but again, that global customers have to use this platform, etc. But we are positioning ourselves in all those areas to be a manufacturing base for ZF. Right now, it's not a commitment, but that's the direction we are working. Also, we are now positioning ourselves as a production center for disc brakes for a global requirement. All these things work. First, we need to become a successful player in India. With the India volume, if we are able to localize and then position and make ourselves as a globally competitive site. And with that price point, if ZF believes that they can expand their market share globally, then it becomes an automatic choice. So that's the way. So they're working on a few products. As I said, the e-compressor is one thing that we are now seriously focusing on localization, reducing the cost. Second is disc brake is a project that we are now started working.
Okay, sir. That's great to know. Thank you for the opportunity, and thank you for answering the questions.
Thank you.
Thank you. Participants who wish to ask questions may press star and 1 on their touchtone phone. The next question is from the line of Mr. Mukesh Saraf from Avendus Spark Institutional Equities. Please go ahead, sir.
Yes, sir. Good afternoon, and thank you for the opportunity. My first question is regarding the Oragadam facility. I think last time you had mentioned that around October we should start operations here. So any update on that, sir?
Yeah, Mr. Mukesh. So plant is ready now. So we will be moving all the facilities. We have already got a small earmarked space in Ambattur for some of the products which was meant to be produced in Oragadam because the plant is to be ready only now. So we were producing from Ambattur. So we'll be moving there. We are also moving some of these machining lines from Ambattur to that point. Plus there are projects which are actually listed to be produced there. So those facilities also will start coming. So we are now ready to move the machines by end of November. I think it will start, the SOP will start for some of the products.
Okay. And so in your initial remarks, you had mentioned about supplies to 3 plants now in China versus 1 plant earlier, and you had also mentioned about 560cc and 440cc compressors. So are these new export businesses that we have recently won? And if so, have we already seen the full potential of these businesses? Because I'm seeing that this quarter you have reported a very strong export. I mean, it's the highest ever export, 320 odd crores. So just want to understand what is the potential of these businesses that have already started for you, say over the next, say, 6-9 months?
Yeah. On the qualitative side, I would like to highlight the DAF compressor. I must have actually made a mention saying that now we will start supplying compressors to DAF globally.
Yeah.
In the DAF there are two aspects. One is 562cc compressor, 564cc compressor, where volume is increasing because DAF is probably gaining market share globally. So that is one aspect. Second, the other one, the 440 version of the compressor was actually produced from our US plant and supplied to DAF. Because of the cost advantage that we are able to provide, that also now shifts to India, Chennai. This is in the case of DAF. In the case of the lever we had invested, but lever production started about 2 years ago in a small way. First to China location, one of the China WABCO plants in China. There are plants in China. Now this is again true because of cost competitive products, so they see more opportunities to be used in other sites. So 2 more sites also purchasing from us. So, these are all the projects that is already we were working in the last 2-3 years, but now more and more volumes are coming.
Right. So then the potential of these basically we have to still see the full potential of these in the numbers yet.
Yeah, in the case of levers, we may see some more potential, and if I also told, this lever is required for the disc brake. We're also trying to make India as we are, working to make India as one of the possible locations for global supplies. That's a project we are now working. Meaning, with the lever already produced here, competitive, plus India is a place where, all the castings, forgings, all those things. This brake has got a lot of castings and forgings, machining, etc. With that, globally also our colleagues want to evaluate if India can be a competitive site. So we are now preparing and trying to push others in that thing. So with all that, I would see the opportunity further expanding.
Sure. Thank you. And one question. One question. On the outlook for commercial vehicles, you did mention about trailers doing better, but on the other hand, you mentioned mining was slightly weak, maybe seasonally. But how do we look at, say, the next 1 year for the MHCV industry, sir?
Yeah, next 1 year, I would say we look at very positively only. These are all very short-term issues. The monsoon and its impact on the mining. That's a very, I would say, it's a 1 quarter type of scenario. And we have already got from the customer indications for the next 3 months or next 5-6 months. It's a very positive indications have already come. We see a growth at least up to March. I believe things will only in the positive direction. Expect some good growth. On the export side, I feel there could be some temporary, depends on the global scenarios and all that. When there are projects in which our demands will be increasing, some of the regular volume, there could be some moderation in the next quarter or so. Because otherwise also, because of Christmas and the annual New Year, etc., there will be some delay, some pickup will be delayed for 1 up to 2-3 weeks and all that. So that's a normal phenomenon.
Sure. Understand. Just one last, if I may squeeze, on the margins. We have seen broadly margins remaining flat on a quarter-on-quarter, basically from the first quarter to the second quarter. So from here on, do you see any margin levers in terms of pricing, raw material costs, or say product mix? Any margin levers you see from here on?
Yeah, Mukesh, what we are doing is we are now looking at each sector. I also made a mention, we are doing some portfolio management to review some of the products where we are not making margin or good margin or we are losing. Particularly if it is a commodity product, we are trying to review, our focus on those products.
Sure.
This is one. Some cases we are trying to exit. That is one. The second is we are actually globally also set up is driving a major initiative to really see margin improvement and cost reduction. It's a global initiative. We are also playing a key role there. And within India, we are looking at last year mostly we were focused on getting the compensation for the commodity inflation.
Sure.
Then we are now looking at, as I told you, portfolio management. Third is looking at some of the bleeders and actually insisting that the customers have to compensate. And also after we do our homework in terms of cost reduction on the material side. So I would only tell you we are trying to keep improving, but also there is a limit in the industry. But we are trying to challenge the limits.
Got it, sir. Got it. Thank you so much for your time, sir. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Mr. Vimal Jamnadas Gohil from Alchemy Capital Management Private Limited. Please go ahead, sir.
Yeah, thank you. Thank you for the opportunity, sir. Sir, my question on, actually I have two questions. One is on disc brakes. I probably misheard you, but you are talking of disc brakes as an export opportunity or domestic? And if it is domestic, what is the content per vehicle that you're looking at?
Yeah. No, actually what is happening is, already we are supplying in a small way in the domestic market disc brake for electric vehicles. You know, the electric vehicles need to be very efficient to conserve the energy and make sure that, the battery size, capacity and the distance coverage, everything is optimized. So already this is being sold and we have also localized a large part of those vehicles. Numbers are low, but we've been working on this and then this is number one. we expect the market, even in this quarter, we may start selling some of our ADAS solutions in a small way, advanced cyber resistance solutions. One of the major customers in India, we are already working with them, and in our view, this project will take off. Again, the market should understand this, customers should understand this. The volume will be low initially, but there are fleets, who are basically the global fleets, or some those fleets which are carrying hazardous goods. Such fleets, it will start adopting this. There are very clear signals. Same way on the trailer segment, we see a lot of interest in this. So when you want to put a vehicle with advanced cyber resistance systems, this is essentially you have a camera, radar, and work to eliminate accidents, etc. Those vehicles need to have certain basic requirements. One of that is disc brake. Because you can't have an inefficient brake and then try to put all the efficient, advanced technologies and then try to brake. So that is the normal thing. So there are few, not only disc brake, it will have to have a electronic braking system. So an EBS, an ADAS systems and a disc brake will be a combination. For those vehicles which will have this advanced cyber resistance systems, which overall we call it as ADAS vehicles. So this is one topic. So it will catch up. It is one is the regulation, but regulation with or without regulations, now the market has to move to more efficient braking for multiple reasons. And electronic stability control doesn't work if you don't have it doesn't work very efficiently if you don't have a disc brake. An advanced cyber resistance system or an ADAS system or advanced emergency braking, whatever name we call it, that doesn't efficiently work if you don't have a disc brake. So we know the requirement of the likely trend in the industry. So we are now working on kicking off the project first to Indian market and taking advantage, because again then to get the scale advantage, we will also position ourselves as a global manufacturing center, because in our view India has that is the opportunity, because most of these products are mechanical products and castings, forgings, machining, where India excels. So that is the whole logic. Now, on the value per vehicle, disc brake, roughly today, roughly about 20,000 in one wheel. So, if they go for two wheel, normally customers go for nowadays they go for only the front axle. So, two wheels. So, you talk about 40,000. If the customer chose to go for all the four wheels, then you got 80,000. So, this is a broad indications of.
Sir.
Yeah.
Thank you very much for that detailed answer, sir. So just one follow-up here. In the ADAS ecosystem, component ecosystem, we are supplying the electronic stability control, the disc brake, and if you could just mention what are the other components that we are supplying for the commercial vehicles, buses and trucks?
No, another ADAS system is basically a radar and a camera.
Are we supplying that as well, sir?
Sorry, actually, an ADAS system today, we are supplying, we call it as a pollution mitigation, so mitigation system. We expect some customers to launch soon, maybe in the next 1 or 2 months. There the value per vehicle for ADAS itself is about 60,000 rupees. Again, please understand this will change, it depends on the volume scale, but today I am saying. When you have a EBS in that vehicle, the electronic braking system, that will come with another 60,000, 65,000. Then you have a disc brake about 40,000 rupees. So this is a kind of content per vehicle for an ADAS system. But the question is, the volume will be low initially, but we expect that market to quickly recognize the value and move in the direction.
Right, sir. Sir, one question on exports. In this particular quarter, you've done extremely well looking at the macroeconomic conditions. Almost 24% growth rate seems to be phenomenal. Just wanted to understand, do we see some weakness going forward, or given the fact that we have introduced newer products, we are now supplying to BMW and we have also expanded our client base? Do you expect the momentum to continue, or do we expect macros to sort of take over and maybe second half could be a bit weak? How should we understand that? Thanks.
No, normally this quarter, the October-November quarter is a slightly weak quarter because there's an inventory correction, because this is a year-end for our global plants, and the strong pressure globally for ZF to manage the inventory. So there will be some reduced pickup. Is one thing that in the near term, but the very near term, only 1 quarter, I am seeing some. The second is, if you compare last year and this year, the transportation lead time has been significantly coming down in the global shipping. Even in the case of BMW and all that, now what used to take about 60 days, for example, or 45 days, for example, it comes down to probably 25-30 days now. So that much reduction in the pickup will happen. So some headwinds, there's such thing, but not reduced reduction in the demand itself. So inventory correction year-end, again, normally the December, January period, global locations, there will be Christmas holidays and all those. So I see some temporary. But otherwise, I don't see a big, as I told in earlier meetings also, we work on specific projects and we see only a continuous improvement. Some of that that project will offset some of the traditional volume reduction also can. We don't see a big significant reduction, but there could be very short-term challenges.
Understood, sir. Thank you so much, and all the very best.
Thank you.
Thank you. The next question is from the line of Mr. Lakshmi Narayan from Tunga Share Investments Private Limited. Please go ahead, sir.
Yeah, thank you. Good afternoon, sir. A couple of questions. When you started the year and where we are now, it's almost 6 months down. When you set out in terms of your projections, which specific areas positively surprised you, and which areas where we were, things did not go as per plan? If I look into OEMs, second exports, and the third regulatory changes. I think if you look at in these 3 angles, exports, OEM sales, and changes in regulation, where we were positively surprised when you started the year and where we are now, and where we anticipated things will do well, but it didn't pan out.
Yeah, thank you, Mr. Lakshman. So basically, on the positive surprise, if you ask me, there are 2 sectors that are doing quite well now, 2 or 3 sectors. Trailer segment is, for us, very positively surprising. Today, as we speak, we are almost 20% of the trucks that are produced are tractor trailers, and which means trailer-based transportation is rapidly increasing. In that type of situations, we are gaining because we sell products for the truck. We also sell products for the trailer. For example, in the truck, we have the ABS. In the trailer, we have EBS. And in the trailer, we also have, now the government is facilitating or supporting the industry. If they have air suspension, then they can add additional 1 ton per axle. So all these things are promoting the air suspension solution. So we are supporting for the air suspension solution. We are also supporting with the lift axle. So many things. So the surprising thing is the trailer industry itself, which used to be a few years ago, even the basic braking system will not be that, will not be in a good shape. But the government brought ABS to be adapted to that industry. But we have come a long way. I would say almost 20%, more than 20% of the trailers are now with the ABS. About 5% are now with the EBS, electronic braking system. We never thought that industry will actually go for EBS and all that. And it is spontaneous adoption. It's not because of the value they see. It's not by regulation or anything in the case of EBS. This is so if you see our also very in terms of the segment is also quite the margin is a good segment, and we see more opportunities now with you see this industry also will have the a few other technologies like the trailer pulse. We use a trailer telematics, which is called trailer pulse. We are also now selling many of the for many of the players the trailer pulse. The recent times there is also road train projects. Some of the big OEMs, in the truck OEMs, they are also initiating a joint project with the few trailer companies, road train project in which one primo will move 2 trailers like that. So a lot of new things are happening in the industry, and we are supporting that industry with all advanced solutions. So this is one positive, I would say, very positive change that is happening in the industry. But also it will become very safe. The transportation also will become safe. Even the bus segment, particularly in the EV area, not only by the traditional regular players. Now there are new players are coming into the bus segment. Some of them from Chinese orientation. Also there are some Indian players like JBM. Some again very new players in the EV domain. Today the volumes are low in some of them, but many of them have an aspiration to become a global production center. And again, we are very well connected with all of them, and then we are providing all the solutions. Today, in terms of numbers, maybe 40 vehicle sets per month, but all put together. But those companies who came with even a Chinese supply system, there's a need to have a local value addition, so we see more of them being supported by us. So these 2 sectors are, the last 1 year, there are a lot of changes which we didn't anticipate that market will go to this level. And more particularly, some of these players, they're not producing for India, they're producing for global. And then that also, it's an aspirational India type of initiative, so we are partnering with all of them. In terms of what did not go well, I would say the adoption of the ESC is not. We didn't expect that there will be a gap in the implementation because the segment itself is very low, but within that there are some loopholes or whatever. So there we need to work. I believe we need to work with all of them because finally, anyway, they also have to see the value. So our focus is to work with the OEMs and show the value with which I'm sure we'll be able to convince them. So this is what Lakshmana is my.
And thank you so much. And what about the export side? Like how are things shaping on the export side, we have done very well. So is it something which we planned for, or how are things there?
Yeah. Export actually is planned more. There is some recent there's one inventory I said about inventory correction. That is temporarily reducing the actual uptake. But actually we planned still because everything started very well at the beginning. It continues. I'm not saying anything has stopped anything, but it continues. It was as well planned only. I'm not. But as I said, next 2 to 3 months there could be a temporary correction. Inventory, global supply chains are becoming more efficient, and some holidays and all that. But otherwise, export is broadly in line with our plans.
Got it. So one other question in terms of replacement demand of commercial vehicles, right? So I think you made a brief mention at the start of the call. How will that affect the sales of MHCVs this year and the next year? Do you see there's a wave of change towards higher tonnage or replacement demand coming in for the industry?
Can you say it again? I couldn't fully get that.
I'm asking you regarding the replacement demand for the industry, MHCVs, either because what I hear is that there is a movement towards higher tonnage, and there is also a movement of replacing old vehicles. Okay.
Yeah.
So is that playing out for the industry? Just want to hear your view.
Yeah. So one thing what we understood is, we know is that the utilization of the trucks has been very much increasing. We said it's in the range of 70% above. At this level, people will start replacing and also add more trucks. This will also lead to more aftermarket sales as well. Second, this is despite if you see the after the increased axle load that was in the year 2018 and all that. In any case, the truck, the size of the trucks have increased. Mostly now more and more heavy duty segment, 55 tonner, that type of So the industry itself is more towards higher tonnage transportation. Also more trailers, as I said, 20% of the. Anywhere between 15 to 20%. I think most recently I'm told the industry is working to 35,000 per month, so 7,000 trailers are being produced. So about 20% tractor trailers. All these things mean there's a huge, freight to carry. And then utilization also 70%, which means the industry also these new vehicles, higher tonnage transportation, etc., all those things with the tractor trailer also very efficient way of transporting, making the fleets, I believe, more profitable. So which means the growth will continue. Because we had an opportunity to talk to some of our customers. The growth will only continue, and the growth is in the higher segment. Now it's not. If you see the full year, the growth is not in the light and medium duty type of area. It is largely in the heavy duty segment only. Also, tractor trailers, tippers, etc. This trend, as I told you, the data indicates that it will only continue. But that's what we see from the indications from the customers. They all indicated the next few months, at least next 3 months, the projections have been very positive. We are all gearing up to meet that increased demand.
Thank you so much, sir. Thank you.
Thank you. Ladies and gentlemen, due to time constraints, we have the last question from the line of Mr. Bharat from Quest Investment Advisors Private Limited. Please go ahead, sir.
Hi, sir. Thanks for the opportunity. Can you give a little more color from medium-term perspective? How much total capex will require kind of opportunity that we are seeing, and when say this year as well as next 2 years, and how do we see with the export opening up more and more, so our mix of the revenue between domestic and export?
Yeah, I'll handle it two ways. The actual numbers I will request our CFO to give you his own perspective. But in terms of, the industry itself, as we see, it's going to grow. As I see, at least in the near term, it's very clear because the impact of the election and its how that will pan out is something that we need to look at. But otherwise, we are clear, so we are going ahead with expanding our own production, capacities. And I told that our Oragadam site is now getting ready, so we are now moving. This month we'll be moving some of the facilities and start the SOP there. And as far as export is concerned, as such we have been steadily growing. This product export or a service export has been steadily growing. Again, there are certain geopolitical issues on its impact. We don't know the exact estimation of what is going to happen. But if you see the last year and so 1 year before also, despite all the geopolitical problems, we were growing because the industry did not. At least Europe and US, there was not a big reduction in the commercial vehicle transportation in those 2 years also. The future years, how it will happen is a question mark because of this wars and other things that is happening. But we are getting ready with our capacities. We are getting with our, moving ahead with our new projects in the export area because our growth is largely driven by offering a solution for our global organizations to expand their sales with our cost structure. So I don't think there's going to be a big slowdown or something, but we have to keep a watch.
So, apart from localization, which are other strategy do we have to improve the margin, and how much operating leverage we have as on today?
When you say operating leverage, can you say it?
So, in this terms,
Can you say it again?
Hello?
Yeah.
So, currently we may not be operating at full capacity, or some of the underutilization or some of the unwanted cost. And
so we understand the question. Okay. Actually, ours is a continuous improvement, a company with a continuous improvement culture. Because we are a TPM company, we are the first to get a running price when we are Sundaram Creighton, etc. So here the issue is, we are always looking at opportunities to improve our, of course, margin. And this time, as I said, we are looking at in 3 areas. One is, how do we make sure that our products per se, if they are bleeding anywhere, if any of the portfolio is not, we are achieving if they are not achieving the required margin, then we are reviewing those things, working with the customers, trying to reset our prices. There is one aspect. This is after securing the compensation for the commodities, which was the issue last year. The second is we are now looking at all our purchasing, material purchasing, and then trying to put a team to drive cost down in the purchasing system. In that, one of that is localization. We are also looking at regional, transfer from, let's say, south-based suppliers. We used to buy from south-based supply chain to even our Jamshedpur plant. But we see Jamshedpur is more nowadays it's also maturing, and our volume also has reached some very good level in Jamshedpur. So we are trying to localize, regionalize the purchasing there itself. So we purchase, produce, dispatch to customers, customers there. Trying to export, improve our aftermarket business to make sure that we get the best. We reach out to all the customers and make sure aftermarket sales also grows. And then in the materials area, we also have a concept of redesigning the products to cost. So we redesign the products where we feel we are not competitive. We are competitive or we are not making money. We also constantly redesign the product. There's a separate team working on this. Also, the sourcing to another supplier. All that there are many traditional processes also we use. Some area we are also trying to in-source some parts. So multiple ways by which even the purchasing we are trying to become more efficient. The last one is essentially to make sure that our SG&A cost also is optimized or reduced. So as we grow the sales, we make sure that fixed cost is also fixed control is also affected. Or by and large, we make sure that we don't proportionately increase our fixed cost. Also, all the factories we are trying to become more efficient. We are continuously reducing the conversion cost, manufacturing cost as well. But all these things are also possible because your top line is growing. It also supports those initiatives. This is at a very broad level. On your question on the budget, maybe I will request Raja to give you an idea.
So you had another question you want to ask?
Yeah, so what kind of a EBITDA margin that we have, targeted over the next 2-3 years?
So if you see right now on the sale of products, we have reached about 19%, and aspirationally we are looking at reaching our previous best of 20%. So that's what we are targeting in the immediate future, and that's what you will see that even on a sequential basis we had a 0.5% expansion on margins. So we will be continuing to work towards these lines, and all the initiatives which the managing director spoke about in terms of addressing the cost, looking at all those products which are currently not contributing as much as certain other products are a benchmark contribution. We are looking at how do we do right from at the minimum level. We look at the cost, try to reset the prices based on the market status, and also look at exiting if we have to do that. So overall, those are the areas we are looking at. And from when you have to address cost, we are looking at right from the element of what is the cost at which we are sourcing. Are we sourcing at the right price? Does it make sense to in-source it? There are are there costs which are not value-adding, like too much of transportation? From a geographic footprint perspective, is the part traveling too much? So we are looking, also combining it with our ESG responsibilities to see how do we reduce the carbon footprint also, that we don't transport the products too much. In every which way, we are trying to see how do we address this cost. And this is how we want to reach an immediate target from the EBITDA perspective, and also look and expand it going forward with better value add. And as the new products come in, and as we also do the localizations, we should see this trend to continue.
Great. And sir, capex side, if you can give some color.
So the capex side, as you know, we would be capitalizing this Oragadam plant this year. That's about 80 crores, and there's a lot of equipment which goes into which will also coming to capitalization next year. All this will be enhancing the capacities in some of the products which we currently are exporting, and certain other products which we are insourcing, and some products which are currently in the e-mobility and also the electronic stability control, and certain other products which need a lot of localizations as the volumes pick up. So all those things would be in the normal capex plans. We have a normal run rate of about 100 crores. This year and next year we would see 150 to 170 because of the capitalization of the plant and also the equipment which goes into it. Then we may fall back to the same routine. So we would be not too capital intensive, but at the same time we will ensure that our capacities are adequate to meet the demand.
And for new product, do we have to spend little more capex to grow, and in case of improvement in the market, so in that case?
Yes, if we are seeing that some of these technologies which are coming in, like the technologies for the e-mobility and certain the electronic stability control, as we see bigger volumes, we may have to localize them rapidly, and localization would need investments in terms of vendor developments, tooling, some machinery. They would need, and they're all business plans which have been well drafted with their returns and proper hurdle rates which as they meet for the investments, and we are ready to put them into action as and when the volumes require those.
Thank you and all the best, sir.
Thank you.
Thank you. I now hand the conference over to the management for closing remarks.
Yeah, I would like to take the opportunity to thank all of you. Many of the questions were very interesting and very useful. So thank you very much.
Thank you, sir. On behalf of B&K Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.